Hi there, welcome to Kneppy Invest and welcome to January 10, 2025. We are in one of my favorite times of the year as an investor. It is reporting month. We are seeing more and more companies release the half year and some even the full year results. And today is no different. In fact, this morning before I went to my computer, I was looking forward to reading the half year reports from three companies. And those three companies were Ansell, JB Hi-Fi and Car Group, and I thought whichever company released the best results would be the stock of the day. I actually wouldn't have picked Ansell to be the stock of the day. Share price currently up 8%. Car Group disappointed, and also JB Hi-Fi. I thought it was good. There was one slight red flag when it comes to JB Hi-Fi, and I will mention that when I talk about that company during this video. But stock of the day, sort of a no-brainer. When you look at their results, they also had an upgrade as well for their full year numbers, and Ansell. Easy stock of the day. I've already called that video. A few other companies, smaller companies, also released their results, including Janison. A few interesting market updates, including one from Mayne Pharma. Share price of that company up about 23% last time I looked. And what else has been happening today? That's about it. I'll start Entertainment Group. Looks like there has been some rumours of some acquisitions, and that's why the share price of that company is up as well. Now, I have been looking for a calendar, an ASX reporting calendar. I have found quite a few, but I think I found the one I'll be looking at mostly moving forward, and that is from TradingView. Can you believe it? TradingView has an earnings calendar for the ASX that is my preference, and the reason it's my preference, I'm going to show you right now. Here is the earnings calendar for the ASX. The reason I love this is because we have whether the results beat expectations or not. For instance, Car Group, when it comes to, they provide earnings per share estimates and also revenue estimates, and they tell if it's a surprise. And this is exactly what I'm looking for. So for instance, Car Group missed expectations. Ansell beat expectations. JB Hi-Fi also beat expectations, but there was one little slight red flag for that company's results. And I think that's why the share price currently is down. But this is great. I love this. The only thing I don't like about this is you can't go back in time. You can go to yesterday, but there's nothing yesterday. You can go this week, and it'll show you all the companies that have released results. It seems like in the past week, for instance, Beach Energy missed expectations, share price down. Nick Scali beat expectations, share price up. So it does work. And what else do we have here? REA Group beat expectations, share price up, even though the CEO resigned. Anyway, so this is possibly the earnings calendar that I am looking for, because it does show you expectations, and that is one thing that has been missing from all these other earnings calendars. So yeah, I might provide the link in the video description if I remember. And the key thing there is if I remember. By the way, tomorrow, according to TradingView, we have CSL reporting, Computershare, SGH, Breville, Region Group, Vulcan Steel, Satire, 7 West Media. So hopefully that is correct. Might have a look at some of the other earnings calendar just to verify whether these are correct. Okay. I'm not sure. By the way, the other thing I'm not sure is when this gets updated. It was updated at some point today, but I was away from the computer for a while, so I'm not sure when the surprise bit is updated. Was it updated when trading began? But at some point it was updated. Okay, so let's have a look at the ASX today. So we'll delve into this, have a look at the best and worst performing sectors, indices, also companies, and then we'll have a look at some of these companies that released interesting results or interesting announcements. Okay, so I thought we'd be down more than 0.5% today because of the weakness on Wall Street on Friday, but down between 0.4 and 0.5%. So could we say there's a little bit of strength in the ASX today? I don't know. Although all tech is down a fair bit, and also resources down 0.65%. So a little bit of weakness in tech today. Now, the best performing sectors, well, the worst performing sector is by the far looks like tech, but best performing sectors are utilities, staples, and healthcare. I wonder if CSL is rallying on the back or just before their release of their results. And by far the worst performing sector is telecommunications and IT. I wonder why telecommunication is down today. It's led by Telstra. I'm assuming Telstra is by far the biggest company in this sector. So Telstra must have had a pretty bad day. Not really. Oh, Car Group. Not sure why Car Group is in this sector, but I now understand why telecommunications has had a bad day. It is the third biggest company in this sector. So there you go. Car Group. Let's go back to the ASX today, looking at the best and worst performing sectors, indices. Gold's had an okay day today. Banks looks like they've had an okay day today. ASX 20 is only down 0.3%. So looks like the banks have helped the ASX today. Not as much weakness in the banks, and that's why we haven't had as bad a day as I was thinking before today began. And if we click on the ASX 20, nice. It looked like there was a bit of a low. The low was within maybe 10 minutes of opening. Yep, at 10:09. And we have rallied during the day, which is a pretty nice, pretty good. And the best performing, how many companies? 16 down, 4 up. So those 4 companies up must have been some of the biggest companies on the ASX. So I would say CBA's up. Oh, no, I'm wrong there. So let's have maybe BHP's up. Let's have a look. No, in fact, all the big companies are down. So Wisetech's down 4.5%. That's understandable. Looks like the iron ore companies are down. This seems like it should be down way more than 0.3%. Because the best performing company is Pro Medicus, and that's like the smallest company in the ASX 20. Maybe we haven't seen much movement in the biggest companies, only down slightly. That's interesting. If you told me 4 companies up, 16 down, and one of the big companies down is down by 4.5%, I would have said probably down 0.5% or more for the ASX 20. There you go. It just shows you people can be wrong. And I am wrong all the time. Okay, let's turn our attention to the top gainers. Wouldn't be surprised to see Mayne Pharma near the top here. A company called Hydrix up 100%. I don't remember this company. They're a fairly small company. In fact, the 3 best performing companies all have a market cap less than $10 million. I'm not going to focus on these companies. They're small companies. They're miniature companies on the ASX. You will see share price be quite volatile. I'm pretty sure Hydrix share price has been enormously volatile, but I think it's always interesting just to see if they have released anything of note. They must have released something, surely. Yep, Guida Surgical secures FDA clearance. There you go. FDA clearance is something I look for all the time. So that's interesting enough for me to pay a little bit closer attention to this company. But again, the market cap of this company is $10 million. And talking about volatility, when you look at their chart, this company share price has been all over the place during the past few weeks. Look at that. There was a massive up day on the 23rd of January, up 170%. And then the share price fell all the way back to where it started. Now it's gone back all the way back up to where it sort of started the downtrend or the downturn. So too much volatility for my liking when it comes to Hydrix. However, in saying that, I do like FDA clearance. I will pay, more than likely, I will pay a little bit more attention to this company moving forward because of that particular announcement. So Hydrix definitely deserves a little bit of attention. Maybe the other 2 companies in the top 3 don't. Emu up 34.6% on fairly low turnover, and Godolphin Resources. Go Dolphins. Resources up 31.25%. Pretty big turnover there. I'm just going to have a quick look to see if they did release anything. They must have. Surely they must have. Yeah. Outstanding drill results. Lewis Pond's gold silver project. And mostly I don't react to drill results. Let's have a quick look at the chart for Godolphin. And now the share price has been basing. It's been going sideways since August. This could have been a breakout. I don't like the one-day candlestick though. We have seen a lot of selling coming today. The high was near the start of the day. The low is probably going to be near the end of the day. And that is telling me that the sellers are winning the battle. And that's why the share price is moving down, which sort of makes sense because the share price, I mean, this time last year was much higher. So there is a bit of resistance moving forward for Godolphin. And just behind Godolphin, we have Aurelia share price all over the place. And then we have Mayne Pharma. I'll talk about Mayne Pharma a little bit more later in the video. City Chic up 17.4%. I don't think that company released anything. By the way, I did not look at any announcements released after about 10 a.m. So there could be a chance I missed some announcements. No, nothing there. I'd say that's a little bit of noise. I'm just going to have a quick look at the chart for this one because they did release something positive a while ago. So this chart has potential, I think. So they released that positive news on the 14th of January. So it's taken a little bit of time for the share price to start to go up. So this chart does look interesting, and I'm going to put this onto my watch list as well. There you go. Just writing it down, the ticker on my piece of paper, on my little notebook. Anyway, and what else do we have here? Anything else of note? Findy all over the place. We can move on. And Star Entertainment Group up 13.6%. Apparently, there was some confirmed, confidential, indicative, and non-binding proposals to acquire its 50% interest in the Queen's Wharf Brisbane complex. That's why the share price is up. But they did mention also, if I remember correctly, that they have rejected those bids. Response to media speculation. And I'm pretty sure they did say they've rejected it. Yeah, the board of Star has assessed these proposals received, and after careful consideration, which included external advice, concluded that none of the proposals have provided sufficient value for the Star. But what the market is thinking here is, well, there's a little bit of interest in some of these assets, and if they do get a better offer, maybe that will save the Star Entertainment Group. Who knows what Star Entertainment Group will be looking forward, looking forward. Maybe their assets will be much smaller in the next year, much less assets, but that's maybe what they have to do to survive. Okay, so that's the top gainers by percentage change. Top gainers by market cap. At the top is Ansell, stock of the day. Pretty good results. Wait out for my Sandler video on that company to learn a little bit more. Light and Wonder up 7.4%. This is another company I own. This is one I could have missed. Light and Wonder. No, they have not released anything here. Maybe they released something in America. I don't know. I'm not sure what has caused this. I'm just going to have a look at the chart, because if you do see a lot of volume on a day like this, something is out there in the... And to be honest with you, the volume hasn't been that big. So this could be just a little bit of noise. I don't know. But and if you look at the chart, nothing to be excited about the chart. There was that really big down day in September of last year. Share price went down 18%. And to be honest with you, because the share price didn't fall much from there, that means most of the bad news had been priced in. I can't remember why the share price fell on that day, but I think they were stopped from selling something. One of their slot machines or something, they were stopped from selling that because it was too much like another company's slot machines, maybe Aristocrats, I don't know. Anyway, nice day for them. Mayne Pharma, I'll talk about that company soon. Synlait Milk, I am trading that company. It's always good to see the share price up on a trade. In fact, let's have a quick look at the chart for Synlait Milk. It might take a while for this to play out, but I do like this chart. I really like this chart. Share price had a high today of 57.5 cents. So I'd like to see it get above that to get to a new long-term high. So still looking pretty good for Synlait Milk. No qualms about that trade at this point in time. And as we go down this list, there's nothing else here. Self Group again up 9.3%. It was up a lot the other day. And I just sort of feel a little bit of pity. So I think I've mentioned this before, that I am a member of this investment group, and they started selling because a lot of people in this investment group were holders of this company, and they started selling back in September when the share price started to rally. And the reasoning was, oh, it's overvalued. It might be a little bit overvalued. And I was like, just look at the chart, look at the volume. My God, why would you sell on that? And these people just don't look at charts. They just look at valuation and the share price. So some of these people would have sold at 30 cents. And over the past, 4 or 5 months ago, share price has almost doubled since then. And this chart looks pretty good. Looks pretty good. Again, the chart saves me from selling too soon. Okay, so let's have a look at the top losers today. Wellnex, down 19.78%. I did see something from Wellnex. This does ring a bell. Wellnex. I don't know what this company does, except probably a health company into wellness. I don't know. Okay. They did a capital raising. So we can move on. Whenever I see the share price dropping because of capital raising, it's done at a discount, and that's why the share price is down. So let's move on. Although we could have a look at the chart just to see if it does look interesting after today. And share price rallied before this capital raising. Yeah, you can see that little rally in the share price, and it's just pulled back. It's not the worst chart, but Yeah, no, not for me. And what else here? There's nothing much else here. As I go down this list, fairly small turnover, fairly small companies. In fact, the biggest company here is Rubicon Water at a market cap of $73 million. So let's move on to the top losers by market cap. And we have Car Group results. And that's about it. I thought maybe JB Hi-Fi. JB Hi-Fi share price is all over the place today. It's one thing I have noticed, but it's nothing here. So that's it. It's really only Car Group. And I'll talk about Car Group in a second or so. Okay, so let's turn our attention to some really interesting announcements. Now, before that, let's have a look at this article. Morningstar. So I get emails from Morningstar about twice a day. And I just saw this title of this particular article, an ASX share to avoid. I went, oh, I wonder which company I have to avoid. It's REA Group. And in fact, they have a price target of $126. And I was like, how do you get that number? How do you get that? Current share price of REA Group is $262. And I think the P ratio of REA Group is going to be like 50 to 60. And I have a feeling, I just have a really bad feeling, what they've done is they've valued REA Group based off last year's earnings per share, which is a wrong thing to do because there was a one-off and that really suppressed earnings per share last year. And that's why the P ratio of REA Group looks really high. And I have a feeling that's what they've done. Anyway, so apparently this is one company to avoid. Now, the last time the share price of this company was $126 probably was about 2 years ago. And by the way, this chart looks brilliant. Anyway, so $126 was back in the start of 2023, so 2 years ago. Yeah, I was right. And I bought 140. And I think that was a pretty good price for REA Group. And I think that's cheap. So this is another reason why I avoid these brokers or these price targets, because if the share price of REA Group keeps on rallying, they're going to have to lift it, because if they don't, they're going to look pretty stupid. And ridiculous if they have it so low compared where the share price is right now. Anyway, that was a really interesting article from Morningstar. And let's have a look at some interesting announcements that have been released today. We'll start off with Mayne Pharma. Now, if we weren't in February, and if I wasn't choosing between companies who did release their results, Mayne Pharma would have been the stock of the day. And I would have been bad doing it because I don't like this company at all. But I want to try to keep my bias out of my decision making when it comes to charting or technical analysis. I don't like this company. I think this is a horrible company. The share price is up 24.4%. Why is it up 24.4%? The company released a trading update today, market update they called it, and I had a look at this and I went, gee, this is pretty good. I went, this is pretty good. Has the company turned the tables? So that is a question I might be asking myself. And if I'm really true to my word that I have to keep my bias out of my decision making, there is a chance I might trade this company based off what I read here. So revenues, 210 to 215 million. Now, this is a healthcare company. They used to sell those drugs that are they're not patented anymore. What do they call those? Generic drugs. They used to sell generic drugs, and I think they have pivoted towards women's drugs, because I haven't mentioned that in here. Yeah, this underlying EBITDA result is driven by continued growth across the women's health portfolio. So maybe they are sort of pivoting towards women's health. But anyway, this was a pretty nice report from the company. And also, we're talking about this was sort of numbers that are beating expectations. For instance, the revenue was 7% higher than expectations, and underlying EBITDA was 43% better than expectations. So the expectations for EBITDA was 21.6 million, and it's coming in at 30 or between 30 and 32 million. So that's why the share price is up, because these numbers are better than expectations. And whenever a company beat expectations, what happens is those brokers or fund managers who have this algorithm, or whatever they do, this machine where they put in the numbers that spits out a target price, that target price of Mayne Pharma is now going to be significantly higher because they put the wrong numbers in to begin with. They have to increase their numbers. So that is why Mayne Pharma share price is up a fair bit, is because their expected numbers are now much better than previously thought. Anyway, so let's have a look at the chart for Mayne Pharma. Is this a breakout? Is this a breakout? Now, if you have a look at the weekly chart, now this is the reason why I just don't like this card. Look at that chart. This goes back to 2012. Share price high was 2016. Now, between 2012 and 2016, that chart looked really good. And then it just turned ugly for this company. And the share price has been sort of going down ever since. I did trade this company once. This was back here when it looked like the share price was starting to rally, 2018, and did turn, I wouldn't say turned ugly, but I got out fairly quickly. And if you just have a look at the weekly chart, I would say that share price is starting to sort of go sideways, just based off the weekly chart. And if you have a look at the daily chart, share price just all over the place. Share price was rallying back this time last year. Share price just fell off a cliff in May, June, July. Fell from 740 down to 380, so almost halved in a fairly short period of time. And now the company released these results. Is this a breakout? Now, it fulfills my definition of a breakout. So good financial news, tick. Share price at least a 3-month high, preferably 6-month high, tick. Last time share price was this high was May last year. So we're almost talking about what's May? So we're talking about a 9-month high in Mayne Pharma share price. And the other thing is volume. I want to see pretty big volume coming in, and we have that. So it ticks all my boxes for a breakout. So technically, I should be paying attention to this one and really disregard my bias against Mayne Pharma. Possibly the table has turned. It's a turnaround story for Mayne Pharma. Anyway, so possible trade for this company. What else do we have? I did notice, I don't know how I noticed this, Ainsworth, actually it was in the top gainers. So before I start recording, I did notice by market cap, Ainsworth was somewhere, or was here. Oh, maybe it's not big enough. No, it has to be big enough. Oh, I'm doing this the wrong. Here we go. So I noticed Ainsworth was somewhere here. There it is, Ainsworth up 13%. And I was like, oh, what's happening here? But they did not release anything. And that's why I was wondering, because they didn't release anything. But I did see or read somewhere that the Financial Review reported that the company has held informal talks with its largest shareholder, Novomatic. Sources told the AFR that while discussions have taken place, there is no indication that Novomatic has made a formal offer to acquire the remaining 47.6% of Ainsworth. So this particular company owns a lot of shares in Ainsworth, and that's why the share price of this company has rallied. But if you have a look at the chart, it's an ugly-looking chart. Well, it was an ugly-looking chart. Maybe it's changed. No, it's still ugly. Still ugly. No reason to even be thinking about this one. I'll be honest with you. Let's have a look at some other interesting announcements today. GQG had been under stress. Share price sort of like a V-shaped recovery. And the company did release their funds under management. Here it goes. Pretty good. I liked it. I thought it was pretty good. Share price up 3%. And maybe the low has been reached. Maybe that's it. Because a much better funds under management announcement than the previous one. And even though the chart looks sort of funky right now, I think the bad news has been priced in. We saw a couple of bad news days for this company, including their association with Aldani Mines. And then the funds under management a month ago sent the share price plunging for about 3 days. And the share price, beautiful V-shaped recovery. Perfect V-shaped recovery. Share price has recovered quite nicely. So maybe there's some value in GQG Partners. I think there might be. Maybe. I don't know. Anyway, so that's GQG Partners. What else do we have here? Wisetech. Apparently there's been some more weird stuff happening with Richard White. Financial Review mentions that a former employee and contractor has lodged serious complaints with Wisetech boards via their lawyers, with a third complaint sent directly to former CEO Richard White. The company acknowledged the media reports, confirming that 2 confidential complaints related to Mr. White are under review as part of an ongoing board investigation. And that is why the share price is down 4.4%. But if you have a look at the chart for Wisetech, you'll notice a lot of volatility with this company. It's just all over the place. It's just all over the place. The last time this happened was back in October. That's where the share price plunged all the way to $200. It's just going up and down like a yo-yo. This is almost exactly like a yo-yo. The peaks are getting a little bit lower each time, but the lows are getting a little bit higher each time. So the enthusiasm of the yo-yo is becoming less and less. What else has been released today? Pilbara Minerals did release sort of a market update, business and earnings update. Nothing much to glean from this because they reported statutory and reported or estimated underlying and statutory numbers. So underlying EBITDA positive, but underlying profit, not profit, underlying loss. I'm not sure there was much to really, to gain or to lose from. I don't know. I don't know what the word is there. Nothing much to gain. Yeah, it's probably a good word from this. So I didn't think it was positive, didn't think it was negative, and the share price or chart, no reason to be in Pilbara right yet. I think this is an instance where I'm going to remain a little bit patient. Remain a little bit patient, not impatient, patient, because in the past, I've been a little bit too early to the party. I think eventually the price of lithium will go up, but who knows when it's going to happen. It could happen 5 years from now. So this is a case where I'm just going to remain patient, remain on the sidelines for now. Okay, on to some results. So stock of the day is Ansell. I won't talk about Ansell all that much. Share price, as we are in the closing auction, share price up 7.87%. Looks like it might close based off the indicator price or the indicative price. I'm not sure how to pronounce that. Is it indicative or indicative? Anyway, the indicator price is saying it probably might close at $38. Very close to the closing auction finishing. We can have a look at this in a second, by the way. Anyway, share price is up 8% because of two things. The results beat expectations and quite significantly in some regards. I think, what was it? Earnings per share was up 9%, or earnings per share was a 9% beat. Revenue was a 12% beat, and interim dividend 7% beat. So nice beat to expectations. They also increased their guidance for financial year 25. So we had two things going right for Ansell. The results beat expectations and also an upgrade. That's why the share price is up 8%, and that's why this company is a stock of the day. Oh no, a little bit of selling coming in. Not selling, but some sell bids coming in a little bit late. The closing auction should be happening any second now. This is so exciting. So you see people pulling their bids, putting bids in, pulling their bids, bidding, trying to manipulate the price. You see this a lot. And a lot of times you will see the final trade at the closing auction is one share, and that is manipulation. And the ASX seems like they don't care. I've tried to manipulate the closing auction, and I got told off from CommSec. I was told off by CommSec, and I was like, but you can do it. You do it. CommSec, you do it too. Anyway, so the closing auction has been completed. Share price is closed at 37.77, and you'll notice the course of action. Yeah, the last price wasn't 1 cent. Anyway, share price is up 8%. There you go, up 8%. Now let's turn attention to the other two main companies that released results. I could mention Janison, by the way. So this is a really small company. Janison, it's not profitable. Share price up 8%. I'm not sure if I'm going to linger on this one too long. The chart, it looks ugly. Company's not profitable. Chart looks ugly. I thought it was an okay result. There it is, okay result. But again, the company's not profitable and fairly low revenue, $23 million of revenue. They have a nice little table here. So revenue up 3%, EBITDA up 13%, and profit up 26%, but it's still negative. So loss of $3 million in the first half. So I'll be honest with you, just based off the chart, don't want to linger on this one too long. Now on to the three major companies that released results today. Starting with Car Group. So Car Group, this was sort of a miss. In fact, I didn't know the expectations, so I found out later. But on first look, these numbers look pretty weak. I was thinking, geez, not that good. So most of the growth, about between 9 and 12%. And I thought, really? It's not that much. It's not much growth for Car Group. I sort of expected a little bit more for the company. And in fact, yeah, the results actually were a miss to expectations. So revenue, pro forma revenue, was a 2.5% miss. Pro forma EBITDA, a 1.9% miss. Adjusted profit, a 2.7% miss. And the interim dividend was in line with expectations. Also, the outlook commentary lowered its growth expectations from a word to another word. I've never seen this before, but Outlook Commentary lowered its growth expectations from good to solid. Good to solid? No, I don't know. But apparently, apparently they do have an excuse for that too. For North America, due to a delay in price increases. There you go. And that's why the share price of Car Group is down 6.5%. Is this an overreaction from the market? Share price has rallied really nicely over the last 2-3 years, I think. Oh, there's me seeing a breakout and not acting on that breakout. I did not buy shares on Car Group on that day, August 2023. This was one of the most obvious breakouts. I saw it and I went, nah. And I still don't know why I did it to this day. I could have bought, maybe not on that day, but the next 3 days, the share price remained above where the share price finished that day. That's a really good move. So I could have bought on that day or the next day at $26, $27. And so a nice gain over the next few years, but nothing spectacular. And even the chart now looks okay. If you have a look at the weekly chart for Car Group, I mean, actually, it's a really nice chart. This is a really nice weekly chart. I actually once owned this company way back in 2014 or 15, and I just wish I held on to shares in Car Group. So in fact, this is the chart of a high-quality company, and I would not dismiss, I would not push back on that. If anyone said this is a high-quality company, I would not push back at all. I think this is a high-quality company, and even the chart shows you that. So when the share price drops below the 200-week moving average is a time to buy. And at this point in time, it's well above it. So that's Car Group. So missed expectations. That's why the share price is down. JB Hi-Fi. So what I do, so in my notebook, I write down all the interesting announcements, all the T codes. And then beside the T code, I put how I think the market's going to react. So if I think it's going to be a really good reaction, I might put 2 up arrows. If I think the market's going to react negatively, I'll put a down arrow. And if I have no idea, I just put a dot. So with Ansell, I put 2 up arrows. I thought that was a no-brainer. With Car Group, I only put 1 down arrow. So I didn't think 6.5% down. With Pilbara, I actually did put a down arrow. With GQG, I put an up arrow. Mayne Pharma, 2 up arrows. Intertech Pivot did release something today. I didn't talk about that. But I didn't put any arrow for that company. And for JB Hi-Fi, I put a dot. I had no idea how the market was going to react because even though some of the results did beat expectations, there was one little red flag for me. Okay, so sales were a 2.6% beat, $5.67 billion. EBIT, 2.7% beat. NPAT, 2.5% beat. And even the interim dividend was a 2.1% beat. So just based on that, you might think the share price should have gone up for JB Hi-Fi, but JB Hi-Fi's share price down 4.56%, now below $100. The really interesting thing was initially there was a positive reaction. Share price was as high as $108. And I think the reason why the share price is down is based off margins. In fact, that's the thing that drew me into these results. If I can find it here. In fact, I don't have it on this page. I'm trying to remember where I saw it. Was it the presentation or it must have been the presentation. And it must be this. No, it wasn't that. It was EBIT margins. Anyway, group performance. Yeah, group performance. So this looks pretty good. All these green arrows up, but total EBIT margin down 9 basis points. Now, this is not what I was looking at. There was another slide where it had gross profit margins down and also total EBIT margins down. So I would want to try to find that. I don't know where that was. Maybe it was in the Appendix 4D. Maybe. But the most important thing is margin, bit of margin compression, margin contraction, and that is always a little bit of a red flag for me. And in fact, gross margins were lower than expected. So gross margins of 21.8% versus UBS estimates. So a lot of these estimates or these expectations are not from the company itself. It's from the industry, from brokers. So a lot of times companies themselves don't release any sort of guidance. But anyway, UBS estimates of margins were 22.2% gross margins. So that was a bit of a miss there. And that was the only miss. So that's what drew me in, because one thing I don't like to see is margins being contracted. That's actually a negative sign, particularly gross margins, because that's a sign of competition. In fact, they did mention that. I'm pretty sure they mentioned that in some of their commentary. There is an increase in competition, or competition will be maintained, or something like that. I forget what they said. Let's have a look. Again, I probably won't be able to find this, but I'm pretty sure the comment was, it's probably in the presentation. And of course, my mouse is not working. It's probably in the trading update. That's where it probably is, trading update. Here we go. Yeah, so it's the bottom paragraph here. Whilst the group is pleased to see sales momentum. So whenever you see the word whilst or however, you know something negative is going to come. So whilst the group is pleased to see sales momentum continue into January, it remains cautious given the uncertainty in the retail market and the continued competitive activity, hence the contraction in margin. So if we continue to see competitive activity, margins might be contracted for JB Hi-Fi even further. The other thing about JB Hi-Fi, someone mentioned this. If you go into JB Hi-Fi now, it used to be the cheapest products. Now it's more expensive products. You can go to Kogan or Amazon and find their products selling way more cheaper than JB Hi-Fi, which never used to be like that. So the margins probably have increased over the last, say, 5 to 10 years. In fact, it could be interesting just to check that. Let's check that. I'm going to have a look at FinChat just to see if they have seen some margin expansion over the last 5 years. And maybe now is a period of time when margins start to go down for the company. So let's have a look if that scenario does play out. There's a chance of what won't. So gross margins, yeah, look at that expansion in gross margins over the last few years, from 21.4% in 2020 to almost 23% in 2023. So there was a period of margin expansion over the last few years, and that probably has helped the performance of the company. And now we're starting to see margins come back. So I wouldn't be surprised to see margins drop back down to below 22%, which is probably the norm for this company. Okay, so that's all the results that have been released today. I'm going to go to a few of your comments. Community. Each day, or 1 minute ago, you just made it. Each day traders for breakfast. Speaking of gold, I'm not speaking of gold at all. Could you look at my chart, please? It looks to have consolidated for the last 3 months, and chart looks like it's going through a breakout. Let's have a look at AMI, Aurelia Metals. We'll have a look at the daily chart. I can definitely see why you're saying it's going sideways. Yeah, it's not really, hasn't really moved. I wouldn't say it's breaking out. I think you need confirmation for this to be a breakout, because the share price is still about 20 cents. And for me, for this to be a real breakout, you need to see share price get at least above 23 cents. So not quite there for Aurelia Metals, but who knows? Share price keeps on going up here, and this could be the start of the breakout. Maybe the breakout will happen in the next few weeks. Maybe you can get in earlier, before the breakout, but that could have happened last time. You might have thought this was a breakout. Now, the reason why I probably prefer now than, say, back in October is if the share price does get to, say, 22 cents, it was 22 cents back in July. So we're talking about, what's that, July, 8-month high? So, yeah, so there wouldn't be that much resistance at that level. So it's very close to a breakout for Aurelia Metals. Thank you, Eats Day Traders, for breakfast. Sensei 6011 loves Nasdaq companies. Another company, TSSI. Another one I know nothing about. TSSI, which is, if this works, looks like TradingView does not want to work. TSS Incorporated. And Sensei says future potential and how it has done in the last 365 days. Now, if this is just based off a chart, this chart is brilliant. Love this chart. So why do I love this chart? A long period of time, the share price did absolutely nothing. Share price started to increase back in February, April last year, and we started to see volume increase. So we have everything going for it. Beautiful uptrend developing, volume starting to increase. In fact, we started to see volume increase even further. So you see stages where the volume goes up and then comes down a bit, then goes up even more, then comes down a bit. And always corresponds, the increase in volume always corresponds to share price going up. Exactly what you want to see. And when the share price dips, you see a very low, sort of a lull in volume. That's exactly what you want to see. You don't want to see the opposite. And the share price just keeps on rising. And look at the increase in volume. It's just exploded since November. Share price has increased from $1 to $15, $16, $15. So it's been a 15 bagger in the past. So it broke out at 50 cents. This has been a 30 bagger in the past year. 30 bagger in the past year. Our markup is 335 million. So this is a small company. I doubt this company is profitable. Ooh, wait, it is. Third quarter profit of 2.65 million, revenue of 71 million. So a substantial increase in revenue, and the company is profitable. If you have a look at the if you have a look at the last 5 years, revenue is up and down. So there's some really good years, a couple of bad years, and on occasion the company is profitable. And what does this company do? Let's have a look via TradingView. Engages in the provision of comprehensive services for the planning, design, development, and maintenance of mission-critical facilities and information infrastructure, as well as integration services. Operates through the facilities, blah, blah, blah. A lot of stuff there. Founded in 2004. Chart looks brilliant. Chart looks absolutely brilliant. I do like this chart, and that's what I'm going to say. So it's done fabulously well the last 365 days. Now, just because it's done that over the last year doesn't mean it's going to continue doing that in the next year. And I have no idea about the company itself. Gazmo says crossover on Fenix chart. Yes. I think it was looking like a crossover was quite close. And we have it. Yes, we do have it. We have that crossover on the Fenix chart. Yeah, it looks pretty good. I do like iron ore as well. So Fenix is definitely a watch for me. I'm going to go through these. ING thinking bird flu. Oh, Ingham's. I was thinking you meant the bank. I was like, ING bank thinking bird flu. Okay. Okay, that's all I have for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. And that's it. Have a good day.